We start the evening with AIM-listed Zephyr Energy, an ESG-focused oil and gas business with operated assets in the Rocky Mountains, which has been buying distressed, non-operated assets in the Willmington Basin in North Dakota. The plan is that revenue streams from the new assets should pay for exploration and future production in the Paradox Basin, Utah. The Zephyr share price reflected the excitement, with Zephyr the top performing share on AIM from January to June 2021. See, we only bring you the best here. Today, the market cap is around £71 million. We're delighted to have the CEO, Colin Harrington, with us. He's live from the States to give us an operational update. Welcome, Colin.
Thank you, Donald. Thank you for that introduction, and welcome everybody. I really appreciate you taking time on a Thursday or a Tuesday night to listen into the story. Much appreciated. So we've had tremendous momentum this year, a lot of progress and a lot of things to come. I will try to get through it quickly so that I can take your questions at the end, and I hope everybody can see my screen at this point. Let's see. So skipping through the disclaimers tonight, what I'd love to talk with you about, I'll give you a quick corporate overview, review what we're doing on the non-operated side of the business in the Willmington Basin, walk you through our flagship operated asset, and talk a bit about our ESG philosophy and how that ties in, as well as give you a summary and a set of next steps as to what's coming. The picture on the right here, by the way, just for those interested, is the drill bit that we just used on the State 16-2 LNCC well. Was down at 14,700 feet before not that long ago, now up and safely back to surface. So to move forward, I always preface by saying this: we have two core values, and every decision we make in this company is guided by those values. We will be responsible stewards of investors' capital, and we will also be responsible stewards of the environment. It's really important to me that everything we do is colored within those lenses. So to give you a bit of the corporate overview, we are an oil and gas company 100% focused on the the responsible resource development and carbon neutral operations in the Rocky Mountain region of the US. We've got a very large operated asset, the appraisal asset that we're developing in the Paradox Basin of Utah. And then we've got a portfolio of non-op assets that we're growing quickly in the Willmington Basin. The operated side in Utah, there's a lot happening there, which I'll walk you through tonight. But it's a large position of about 37,000 acres, seismic across the majority of that acreage, a lot of log and core data, and recent pressure test data as well. Our well there, the State 16-2 LNCC, has just been drilled. It's safely at TD right now, and we will be completing it in the near term. And that well will be the first test of modern hydraulic stimulation and a horizontal wellbore in this part of the basin. We're really excited about that. It's a proof of concept, which could lead to a much wider development there. On the investment side and the non-operated assets, we look for near-term opportunities with strong operators where we can acquire non-op interests for low acquisition costs as related to CapEx, get rapid paybacks, strong margins, and we use that cash flow, as Donald said, to fund a lot of what we're doing in the Paradox Basin or to make other acquisitions. We have funded 4 acquisitions to date this year. There's been a lot that's going on. All of that has been funded from cash on the balance sheet after our raise in March. We now have just over 500 barrels a day in August from that production, and it's growing. We should have an additional 15 wells coming online over the next few months, and a lot more production growth happening there. So to take you to our corporate overview, share price has been around 6p, just under 6p as of yesterday. That's a market cap of £72 million. There are 1.3 billion shares in issue and 0 debt. We are very conservative with our use of leverage. At the right point, with the right amount of production, we may layer in a bit of RBL type debt, but we're very conservative in that side of things. The board and our affiliates have bought 12% of this company over the last 2 years. That's not share options and share salary sacrifice. This is we've purchased shares with our cash, and we're very aligned with our other shareholders. We also have about 16 million in tax losses, which can be used to offset the income which is coming from our wells that are now producing in North Dakota. So from a corporate standpoint, I love how we're positioned. Obviously the shares have done well this year, and I think that was really teed up by what we did in 2020. We announced a $2 million government grant to drill a research well on our site. We were able to later go in and use that wellbore to drill the lateral portion of the State 16-2. It was a very safe operation, successful operation in record-setting time, all while adhering in a very difficult environment to COVID-19 protocols and so forth. From that, we got the first look at a continuous core in this part of the basin. We got a lot of sidewall cores and a huge amount of log data, and all of which has been under analysis since. And at the same time, we went out and received and were able to put together an agreement to start acquiring economic production and near-term production in the Williston. And that was at a time where the oil price was around $45 a barrel. So very happy with our positioning there as well. That's led us into 2021. We did a 10 million pound fundraise in March, which has fully funded us for everything we wanted to do across this portfolio. And what we've done since then, we've drilled the horizontal portion of the State 16-2 safely and successfully to TD. We've located it in a great spot of the Cane Creek, and that well is now ready to be completed by a hydraulic stimulation in October. We've done a huge amount of analysis on the data received from the logs, the cores, and pressure test data, which have all given us a series of green lights telling us to go forward with this development. And for that reason, we've elected to run production casing on the well and complete it as a test of a hydraulically stimulated resource play, an HSRP. If we are successful in doing this, it could lead to a significant upsizing in our resource estimates. So I said before, we've done 4 different Williston Basin acquisitions, which have given us exposure to 22 different well bores, 500 barrels a day online with that right now. The other 15 wells have all been drilled and are awaiting completion, and we'll see that come online over the next few months. We've also added additional acreage in the Paradox based on the excitement from what we've seen to date. The rest of this year, the way we're going to focus, we have made a commitment to be 100% carbon neutral by the end of this month. We will be delivering on that commitment. We are also spending much more time reaching out to existing shareholders, partners in the U.S., industry partners, and investors in the U.S. We're now dual traded on the OTC. We will be completing this well, which is a proof of concept for HSRP in the Northern Paradox, and planning for additional wells given the excitement of what we've seen so far. And obviously, we're generating a fair amount of cash flow at this point, which will be utilized back for further Paradox development. And on the non-op side, again, 22 wells with working interest that range from 1% to 37%. We expect our production number to be growing nicely over the next few months, and we see a lot of opportunities to acquire similar assets in the near future. So let me talk just briefly about the non-op portfolio to give some people context behind the Williston Basin and what we're doing there. North Dakota, monthly drilling and completions. You can see after December 19th, when COVID hit, oil production and gas production has fallen somewhat from there. We're seeing a slow return, but overall, there's still a fair amount of distress in the sector in this area. That being said, the people that we're partnering with, including Continental, which is circled CLR, and Whiting, circled down below in the pie chart, they're 2 of the largest operators here in the Williston Basin, very active and very quickly moving forward with their drilling and completion plans, and we're happy to be a partner with both of them. Just to give people a sense of how we step into these positions, the chart on the left here, the map, is just a standard township and range map that you see without any wells put in place. And the red boxes are some of the pads that we participate in. Each of those boxes, the small boxes, is 1 square mile. So operators come in and try to get a majority in a 1, 2, or 3 mile position and propose wells and drill them. But because of the messy nature of land holdings here and lease holdings, as evidenced by what you see on the right, you can see you can have a huge number of operators in one relatively small area and thousands of wells. So in this case, to the right, Equinor, Hess, Kraken, Whiting, they're the primary operators where we are. They are all, to their own extent, subject to capital constraints at this point, investor constraints. They are largely unwilling to be drawn into non-operated investments when one of their lease positions is nominated by somebody else. So through our relationships here, through our JV with Purified Resource Partners, we're able to step into drilling obligations that operators might not want to. And it's not just operators, it's a whole host of leaseholders, and pick up exposure into near-term drilling so that we can participate in near-term production. Again, all on the non-operated side, but the economics are wonderful, and I'll walk you through that next. what we try to do when we're looking at asset acquisitions in this area, we want reduced drilling risk because you're in a prolific area where it's well understood, the geology is well understood, or sometimes zero drilling risk. Almost everything we've done so far, we've acquired wells that have already been drilled and are awaiting completion. That means you get cash flow in the near term. You have the ability to generate hurdle rates that are in excess of 40% IRRs with very rapid paybacks. It helps us cycle cash more quickly. It lets us utilize our historical tax loss position of over 16 million and to step into deals with low entry costs. Really, the costs that come with this are the CapEx burdens that we pick up. We always partner with strong operators. That's a key location. Our two real criteria are excellent locations and then obviously the right operators to do that. And we are able to layer on production and cash flow to shape it fairly nicely to maintain a strong profile going forward. This has all been a lot of progress in a short period of time. We will release updated production and cash flow estimates once we hit peak production volumes from these initial wells. Obviously, more are being layered on behind that. And with this recent JV with Purified Resource Partners, and they are acting as a co-investor, I should add, a co-investor and an advisor to us, we have a significant amount of additional deal flow, and I'd like to continue to deploy capital here. So let's turn to the flagship, the operated asset, which is the Paradox Basin, and that's a picture of the Cyclone rig number 34 that recently drilled our well here. It's a big position, as I said before. We have an application for a new federal unit across it in progress. Unlike most U.S. basins, this has historically been a natural fracture play. So there have been 10 million barrels produced to date, largely in what's called the Cane Creek Reservoir. Horizontal drilling and hydraulic stimulation really have not been utilized here. And that's part of the opportunity that we see. In recent years, you've seen a move from 2D to 3D seismic. We have very recent 3D seismic with sophisticated horizontal drilling techniques, directional drilling capabilities, and improvement in completion. We think there's a massive opportunity to take some of that and test it out across our own leasehold. And I'll walk you through why we feel optimistic about that. As I said before, this is 25,000 acres under seismic. The rest does not have seismic yet. It's a mix of federal and state leases. There's good access. There's infrastructure, roads, and even pipelines across our position. And importantly, the Biden administration has halted the issuance of new federal leases. So active leases like what we have here, contiguous ones, 25,000 acres that are contiguous, are exceptionally hard to replicate. We've approached this project in a very measured way. We have a measured approach to risk. The reason we had that caution stepping into this is it's an appraisal project in an underexplored area with very high pressure reservoirs. There's the presence of natural fractures throughout, which is beneficial, but also can pose drilling challenges. And unlike other resource plays, you don't have a lot of historical data in this area from vertical wells. So if this had been an easy place to come and do hydraulic stimulation, it would have been done before. It would have been exploited, certainly at the beginning phases of play. We think now is the right time. The other caution is we always have lease maintenance and gas export challenges that we are going to face while we're pulling this together. I think we've largely addressed those, but it's something that's always on our radar screen. Now, the reason we have optimism as a company is because of this contiguous acreage position. Difficult to replicate. We love that it's been underexplored and that it has very high pressures, which drives the reservoir drive as well. In the Cane Creek alone, we have a lot of reservoir. We have a number of targets, but there are 20 overlying reservoir targets in addition. Those provide us with 8 high-graded reservoirs that we've decided to pursue. So we think we can add both resource potential through that, as well as by trying to develop this through hydraulic stimulation. We have de-risked this with our seismic, with all of the cores that we've gotten, all of the analysis we've done, all of the pressure tests, and by using internal and expertise through academic and third-party partners. We've de-risked it from a drilling standpoint because the well is drilled, and we've de-risked from a capital standpoint because we received $2 million from the government. So we feel like we're very well positioned to take the next step here. To kick off what we've learned so far, we've drilled and we've landed in a perfect portion of the reservoir. We ran wireline logs that suggest that we have just about 4,000 feet of horizontal well, which can be completed. We've set production casing, and we've done this fracture injection test, which is simply, it's almost a miniature fracture at the toe of the well where you stimulate it, add pressure, and see the response. That gives us a lot of data to make the decision to go forward. What we've observed, there is hydrocarbon presence, not just in the Cane Creek target, but in all of the 8 overlying reservoirs in front of us. There is high formation pressure, which is a great indicator of reservoir drive. The permeability in this reservoir looks very consistent with other prolific plays like the Williston in the US. And we've seen evidence of hydrocarbon flow, demonstrable evidence into the wellbore during the defit operation, which again has led us to the place where we will go and complete this as a hydraulically stimulated completion. The next steps for that, we'll have a completion crew there in the second week of October. That completion work should take less than a week, and we'll begin producing rate after that. Now, I want to caveat this by saying it's been a summer of extreme weather events and supply chain disruptions. We've maintained an ambitious schedule. We've hit all of our targets through mudslides to our main interstate, flash floods, smoke from fires. It's been an intense summer, and there are labor shortages across the region as well, particularly around trucking. We've done our best to operate through that. We've done it well, but it's always in the back of my mind that we do have challenges there. And again, the other challenge here, it's a highly pressurized reservoir that can pose challenges while you're completing it. But again, strong completion design and the right execution is critical, and we think we have that in place. The reason we're completing this through HSRP is it provides potential for significantly larger and a more predictable project than targeting natural fractures alone. There's a nice interplay potentially between the existing natural fractures and the hydraulically stimulated fractures. It leads to a much wider development where we are likely to develop the overlying reservoirs. And it's just the overall size of the prize we believe is both increased and also de-risked. So what is that size of the prize? These are internal resource estimates for HSRP development using the Cane Creek and 8 overlying reservoirs, all risked, decent risks and recovery factors. What we see is up to 200 well locations across this portion of our acreage. That's an estimated P50 of 1 billion barrels of oil equivalent of hydrocarbons in place, again, across these 25,000 acres, and up to 143 million barrels of oil equivalent of net contingent resource that's recoverable. We are working with the CPR firm to update the economics behind this, and that'll be finalized post completion of this well in the fourth quarter. So much more to come on that front. Last considerations, based on the green lights that we've seen, we are envisioning a multiple well campaign here in the near future. We feel confident that not just the Cane Creek, but the shallower classics offer opportunity, and our board is fully supportive of drilling out additional wells here to delineate the acreage. Important things that we do right now with the State 16-2 will help us understand things like well completion techniques, spacing, and even lateral length. Lateral length is a great point. This initial well is 4,500 feet of lateral. Future wells would likely be 10,000 foot laterals that are extrapolated out accordingly. So there will be future improvements that help us bring even stronger production numbers and resource numbers here.
2 minutes, Colin.
All right. So lastly, on our ESG side, and this is a picture of my dashboard at 101 degrees. Our philosophy is that climate change is a threat. We should be engaging with the industry rather than straight divestment. Oil and gas is in global common usage, and our industry needs to play a role in solving that. So we have announced 100% carbon neutrality, carbon mitigation program by the end of this month, and we are a large way to getting there. Similarly, on the local side, HSRP developments have been controversial in places across the US for noise reasons, traffic reasons, emissions, water usage, and so forth. Here, with our location, and I'll give you a bit of a tour, with a much better well spacing and with zero traffic noise or emission impacts, we think this is the right place to be going out and developing this type of development. So let me give you a few pictures. This is our closest convenience store. It's about a 5-minute drive from our site. There's nothing around this for miles in either direction. Joe's is the place if you need gas or food, this is where you go. From that point, you proceed down what nominally is a paved road, at least in some places. And from there, you look for the road signs that lead you out to our well site. It's a dirt road from that process. Everything that you can see in this picture is Zephyr leaseholding. You proceed from that along a dirt road and eventually find a rig that comes into view, which you can see there in the future. This is the residential dwelling on the pad. I think it has not been lived in a little while, but it's the closest thing we have to neighbors. But what we do have is existing utilities across the leasehold, and we also have the existing pipeline. So again, a great place to try to do this type of development. So final steps here. When I look at these assets combined, we've made huge progress understanding what we have in the Paradox. We've de-risked it completely to the extent that we can without completing this yet. But financially, technically, and with the analysis we've done, we feel like we've made great progress. The next step is getting the completion data and then future wells drilled. On the Williston side, we're going to continue to get complementary asset acquisitions and see increases in our current production coming on shortly here. In terms of next steps, you will see an announcement from us shortly around the Scope 1 carbon neutral operations and half-year results. The completion crew will mobilize shortly. There will be production there following. And there will be a lot of data that flows in the fourth quarter. Williston production updates, a revised CPR covering both sides of our business, newly acquired wells coming online, and always potential for additional partnerships or acquisitions. My vision is to scale this into a carbon neutral oil and gas company with growth from the current wells in the portfolio, with growth from resource to reserve conversion, with growth from resource additions from the overlying reservoirs, not just the Cane Creek, growth from development type by using the HSRP, and growth from continued acquisitions. And always, always, always to be responsible stewards of our investors' capital, of which I am one of them, and responsible stewards of the environment. So that's where we are, and I'd be happy to take questions. Sorry for plowing through that so quickly.
Okay, Colin, thank you very much indeed. Yep, you packed in a ton of things there, Colin. Can I start by asking you about due diligence and the deals that you've been pulling off at great speed?
Sure.
How hard is it to guarantee that what you think you're buying is what you actually get? How easy is it to do due diligence?
With preparation, we can be quite good at it. So we started by looking at the Williston by taking, as you saw from that map, in our one county alone, I think there are 8,000 wells. We have access to production data and forecasts. We take that and we built a basin model focusing on locations that are most effective, and also parsing things like operators, vintage of well completions, completion spacing and design. There are a whole host of factors that we've put into a database, and we can actively look and quickly, when something is presented to us, A, see if we like the location, B, if we like the operator, and C, the plan. We then take that, build our own internal type curves and forecasts, triangulate it with third-party data, which we also receive. And then lastly, if there are operator forecasts available that are public, then we will triangulate it with those as well. So it's a lot that gets packed into a short period of time, but because we've done a huge amount of prep work, we can be responsive to sellers. We can give offers relatively quickly, and we feel very confident working in an area with so much production data and history that we can build curves that are conservative and will be met. So it's a great question. It wasn't easy to get to this point, but we think we're in a really good position now to continue building as quickly as we'd like.
Okay, and what about other acquisitions? Might your next acquisition be in the Willmington Basin or elsewhere? We're always going to concentrate on Rocky Mountain basins. We have a strong comfort level in the Williston, and we also have spent a huge amount of time and have built up a similar data set in the DJ Basin, which is Colorado and Wyoming. So we are certainly looking, and I think it's most likely that you'll see us in either the Williston, in North Dakota, or Montana. We've just stepped into Montana recently. And similarly across the DJ. That's where I would expect non-op acquisitions to come. Operated side, we have our hands full. We have such a large project there that now that we've built up around that and recently acquired the additional acreage on that end, I feel really comfortable with where we are on that side. Okay, a cheeky one from me, Colin. Hydraulic stimulation at the Paradox Basin. How does that fit with your ESG credentials?
Well, look, I think as I was trying to show through those slides, if there's ever a place to do it, this is a very good place because it minimizes the surface disruption. We can go into, I think I've mentioned this before, and apologies for the office phone there, but we are operating on what used to be a missile range, an Air Force missile testing site. There's lots of roads and infrastructure throughout, but there are no people. So a lot of what goes into the complaints about hydraulic stimulation are noise, traffic, air and emission complaints, or water problems with fresh water or trucking that water in. We don't have those issues on our site. We are good neighbors to the community of Green River, which is 12, 13 miles to the northwest, and we utilize a lot of people from there. But there won't be local concerns from that. And when you look at the more broader basis globally, we are doing our part right now to mitigate all of our carbon footprint from Scope 1 and Scope 2 emissions. I hope to be doing more and some pretty creative things in the future. But we think this is a step and a good step for now.
Okay, you're dual traded on the OTC, and Douglas Rouse and David Johnson both make similar points. Basically they're saying there's not much happening on that OTC. The American appetite seems to be low. The American investor share platform hasn't yet excited. What are your thoughts on that?
I agree, and I think it's 100% incumbent on me to get out and start telling this story in the U.S., which we haven't really done to date, but we will begin now that that platform is up and running, and now that we've reached a certain level of scale, both with our non-op operations coming in nicely, and we're on the precipice of good things in the Paradox, in my opinion. I think it's the right time. So I will be making a concerted effort over the next few months, both to build up, retail and institutional investor awareness of our story, as well as continue to talk to partners and strategic partners that we might have here. So I couldn't agree more with you. It's something that we need to build up, and we are aware, and we'll certainly be working on it over the next few months.
Great. Kenny McKeever, who may be a Scotsman, given that he's called Kenny McKeever, he's got in touch by email to say, well done. Here we go. I'm saying nice things now. Well done for the investor communications from Zephyr, which is best in class. So take a moment to bask in the glory of that.
Thank you. I mean, very kind.
However, he says it would be useful to see an estimate of the discounted NPV value of the Zephyr estate in its totality, taking all the latest assets and Paradox drilling into account.
Absolutely. I couldn't agree with you more. We've done so much in such a short period of time that sometimes the data, the volumes, the cash flow need to catch up with where we are. So the fourth quarter is really that period. We are putting together a CPR that will cover both the Paradox Basin and everything that we've done in the Williston, with the economics behind that. So you'll have a sense not just of reserve estimates, but third-party stamp on what they think the economics will be. And by that point, we'll have enough time particularly from our Willmington Basin production that will have hit peak. We'll understand where it's leveling off. And I think we'll be in a better place to do that. So I couldn't agree more. It's a function, I think, of doing a lot in a compressed period of time. And now we have to pull it all together and be able to demonstrate what it looks like as a whole. You're
growing up in public, Colin. It's a difficult thing to do. Okay. Kenny also asks a slightly cheeky question. He basically says there's been lots of fantastic news, but blah, blah, blah. Share price isn't really going anywhere. One way to realize value is to actually sell the company. Would you ever consider doing that?
Of course. Absolutely. I mean, remember, my partners and I and our board have 12% of this company right now. So we're very vested in the equity value of this. This is not a lifestyle company. It's one where our drivers come from our ownership. If it makes sense from an investor standpoint to bring somebody larger in, whether it's a partner in the Paradox Basin, or whether it's selling the company to somebody that could drive it forward, 100%. If, with anything like that, we will be extraordinarily careful to measure up the risks of doing so, to measure the opportunity that comes from it, to make sure that it would be going into good hands. But of course, philosophically, we will consider all options that are in the best interest of shareholders.
Great. Last question for you, Colin. Simon Thompson says, is the real risk the federal application on the Paradox Basin could be denied? There you go. That's your last question.
Okay. No, so we've already received the permits for this well, obviously, and we have other permits in our back pocket. We also have a lot of state land that if we have trouble permitting federal wells, we could turn and drill pads from state land. It's actually where we're drilling from right now. So I think we're relatively well placed. The administration has shown an unwillingness to give new federal leases, but they have been approving federal drilling applications. I think, again, if they're going to be, if they're going to look at a positive light at any type of drilling, doing it in a place like we're doing and with, a real focus on the environmental concerns, I feel well positioned there, and I fully support what they've done to date. So happy how we're positioned, and I think it's a great question, but one I feel comfortable with.
Colin, thank you so much for joining us tonight. You've been a star, and thank you for getting through so much information and giving us so much detail. Thank you.